45 points higher. 10,850 is kept.
20 points, 21 points on the Nifty. So pretty flat markets, almost at the day's lowest point.
So 10,800 was not breached at all, and the market now trying to make its move back towards the high point. Top 4 or 5 names were mostly either commodities or PSU names. IOC up 2%. Then you had Yes Bank and ICICI Bank with about 1.5% gains.
Volatility is the only constant on Dalal Street as February series draws to a close. Sensex gives up 200 points intraday to end with minor losses. Nifty loses about 0.5% in this series as it ends just below 10,800.
CNBC TV 18's Newsbreak confirmed Future Retail subsidiary has signed a master franchise agreement with 7-Eleven. The company will now develop and operate 7-Eleven stores in India. Future Retail stock gains 3% plus in trade.
NBFCs and housing finance companies rally as the Reserve Bank decides to infuse 1 lakh crore into the banking system to ease liquidity by long tenor repos. However, PNB Housing tumbles on news, again a CNBC TV 18 news, that Punjab National Bank is looking to sell just 13% stake in PNB Housing.
Asian equity slip after Trump-Kim summit is cut short. US and North Korea failed to agree on a deal. We had markets in Shanghai, Nikkei and Hang Seng all ending in the red. Kospi, of course, is the biggest casualty, losing almost 2%.
And equity mutual fund flows are expected to see a sharp drop in February, marking the 4th successive month of falling inflows. Fund managers say the pace of redemptions is on the rise, seeing lower incremental flows into SIPs as well. Well, those were the top 5 headlines from Dalal Street. Hello and welcome to Markets Today Talkback, the show where we will tell you everything that happened on those 6 hours of trading, volatile trading because of FNO expiry today. And we'll tell you all those details in just 5 headlines. I'm Lata Venkatesh, with me, my colleague Prashant Nair. Hi, Prashant.
Hi, Lata. Absolutely flat close by 3:30. 5-point change in the Nifty. Over the next 30 minutes, we will talk about what matter, the top 5 stories. Our guests will take your questions. Mayuresh and Mitesh are the guests who will help us today. Gentlemen, thanks very much, both of you, for being with us here. But as always, let's spend 2 minutes looking at the day's events. What really mattered in trade right from the word go. Lata.
Well, actually, the Nifty moved in a familiar range. We have been seeing resistance coming in at 10,850. We are seeing support come. Usually, the first support level has been 10,780. It moved in familiar terrain, and the volatility could be explained by the fact that its expiry of both weekly options and the month's options, February options, and futures. The ambience was not very positive for the bulls because Asian markets, European markets were all lower since the Trump-North Korean summit did not yield any concrete results. And in terms of sectors, oil was positive because crude prices were lower. Autos were negative because the March 1st announcement of February sales is not expected to be too good. So there were just these sectoral things, but you're better at that. Tell us stock details.
Oh, absolutely. And a fair bit moved, Lata. So let me start with sectors. Media, real estate and metals did well. I mean, these are the 3. I mean, actually, energy as well. But primarily, the big ones were media, real estate and metals. On the other side, IT was weak. On autos were weak as well. And I'll come to stocks now. So Vedanta, Coal India, GAIL, BPCL, IOC, ONGC. I mean, these are the large Nifty stocks which did very well. The losers, lots of auto. We get the auto sales numbers tomorrow, remember. And I think there is some sort of a fear that the month of February will once again show, a slowdown after the small pickup we saw in January. Eicher Motors, Maruti, Hero. There was also TCS and Ultratech, which were large Nifty losers. Broader markets, gains coming through in Motherson. There was Voltas, which did very well. Linde India, big one with volumes. Quick Heal came off the highs, but still big one. Delta, KEI, Dalmia. We had Uttam Sugar, DCM Sugar. Actually, a lot of sugar names and smaller sugar companies, stocks doing well. Under pressure, PNB Housing. We'll get to our story in a bit. And there was rain. and there was Dalmia Bharat, which was under pressure as well. Lata.
Okay. Well, you must know that many of the big events happened after markets closed. For instance, information that Wing Commander Abhinandan is going to come back to India tomorrow. During market hours, no GDP numbers, nothing from the war. So we'll have to see how things pan out from here on. Mitesh, on that note, would you play for a long trade tomorrow? I think this is the 5th straight month that the Nifty is ending a little lower than it ended the previous month. Yeah, Mitesh, we can't hear you.
Audio check.
Yes.
Can you hear me now?
Yes.
What I was trying to say, Lata, is that most of the volatility indicators are turning flat, which means that there's no directional bias, and I think this broad range of levels of around 10,950 to about 10,750 will remain. So I think we still don't have a clearly decisive in the trade in the sense. So the idea to trade ranges when you don't have directional bias is to wait for the lower levels to be tested and then try and initiate a trade. So I think that's the only way you can possibly approach the Nifty right now.
Okay. Well, with that, let's get to the second headline. CNBC TV 18's news break was confirmed. Future Retail subsidiary Food Brands has signed a master franchise agreement with 7-Eleven, the very famous store that you must have seen. According to this deal, the Food Brands will develop and operate 7-Eleven stores in India. Priya Seth, who broke the story several days ago, is with us. Priya, contours of the deal?
Well, it's official. Future Retail will be bringing international convenience store chain 7-Eleven to India. In fact, this will happen through the master franchisee route and in line with what we have been reporting. Now, the first store of 7-Eleven will be rolled out in Mumbai in 2019. But as far as the overall mix is concerned, there are likely to be a mix of international as well as local food products that will be available at the convenience stores. There will also be several Future Group private labels from the Future Consumer stable that will be available in the 7-Eleven stores. Now, as far as the revenue expectations are concerned, Future Group has not given out any details on the revenue expectations, but there is a royalty agreement that's in place that both the parties have decided upon. But it also includes a lot of technology sharing, so we'll have to really wait and watch how that really shapes up for the stores going ahead. But remember, this is in line with Future Group's small store strategy. 1,500 small stores at present, and they're looking at about 10,000 small stores in the short to medium term. So this is a space that we will clearly be watching out for.
We are all bound by the agreement, and the agreement allows us sub-franchising, but that's not in the first phase. There is a royalty in terms of franchise fee which we have to pay depending on the sales. Rather, it's per sale, and that's a agreement which we have with our. I don't think so it's a large amount as such, but what we get for that is technology. What we get for that is a system and process. What we get for is the learning from all the other 17 countries and the 70,000 stores which they run.
Okay, we got a question coming in. Priya, thanks very much for that explanation. Vishal M from Mumbai has written in with a question on Future Retail. He's been holding 250 shares of the company for the last 9 months. He's a long-term investor and wants to know whether he should continue to hold or sell. The price, I think, is slightly higher. The price right now is 423 and Vishal's purchase price is 595. He's been holding over the last 9 months. Mayuresh, Future Retail, what would you tell Vishal?
Evening, Prashant. Now, again, I think any decline can be used as a buying opportunity by the investor to probably average out the stock. The development that has happened in terms of 7-Eleven and the franchise that Future Retail will now own in India, I think that's a step in the right direction. On the other hand, I think when you're probably talking about how Big Bazaar has been doing, which is their large format stores, accounting for 80-85% of their top line, the SSG growth has been pretty reasonable at 10.1%. The EBITDA margins for the business have held up at 5.3%. Number of stores that have got opened up over the past quarter, 100 odd. Again, I think Easy Day stores, the small format, is probably aiding the overall earnings momentum as well. And the kind of accretion that we are probably seeing in terms of members getting added, 960,000 members on the Easy Day platform itself, I think that's a very encouraging sign. So in my opinion, yes, I think the stock has gone through a very painful period. But if he averages it at lower levels and holds on for the next year and a half, I think he should be able to make a reasonable amount of a return on investment.
Okay. Mitesh, you want to add to that?
See, I think, most of these stocks have gone through a big correction and now are possibly trying to do some base building. Future retail, I think, has corrected from 570 to about 400 levels. We still haven't got a signal of reversal, but I think that decline arresting, I think, the indicators now turning up is a positive sign. So I think time to accumulate this slowly between 420, which is close to the current price, to about 395 would be my choice. I would keep a stop below 370 here. I think eventually once the base building is done, we can get a reversal to about 485, 500 levels, which should be a profit booking area.
Okay, the third headline today. NBFCs and HFCs rallied as RBI decided to infuse 1 lakh crore into the banking system to ease liquidity. However, PNB Housing tumbled on news of Punjab National Bank, which is looking to sell 13% stake in the company. This is lower than what they had earlier envisaged. Nisha is here with those details. Nisha.
In the latest on the PNB Housing Finance stake sale deal that has been on for a while, we do gather from sources with direct knowledge that Punjab National Bank is looking at slashing the quantum of stake sale in PNB Housing Finance. From the holding of 33% stake in the company, it is now looking to reduce the stake sale to just about 13% is what we gather from sources with direct knowledge. And this would be to General Atlantic, which is private equity firm, and Varde Partner. So we do gather that about 5 to 6% would be owned by General Atlantic, which already has about 10% stake in the company. And Varde Partner could be owning about 7 to 8% in this whole transaction. Deal is likely to be done at 1,000 odd rupees per share is what we gather from sources with direct knowledge. Now the quantum has been reduced because remember PNB had earlier said that their target is to raise about 8,000 odd crore rupees. And since the government has announced a capital infusion of close to 6,000 crore rupees, it is looking at raising only 2,000 crores from this stake sale is what we gather. This deal announcement is likely very soon.
Okay, we didn't have any questions from our Twitter @I on Punjab National Bank, PNB Housing, but we have a question on LNT Finance Holdings. Arvind Deshpande has written saying that he has, holdings in LNT Finance, 100 shares that he has been holding. I don't think there is a price that he has given us, but he wants to know whether he should continue to hold. Mayuresh?
Evening, Lata. No, so again, I think the stock, along with the other peers in its NBFC universe, have gone through a painful time. What has probably happened with LNT Finance in terms of the asset-liability mismatches has clearly played out on the price. But if you look at the expectations over the next few years, I think as the entire CP market, the yields have cooled off, I think as the normalization will happen in terms of liquidity, I think the flows in terms of disbursements and advances growth will again come back. Yes, there is a little bit of a debt issue on the books as well, but that should get ironed out as well as all these issues start getting resolved. So to that bit, again, I think the kind of write-down that they're probably doing, the kind of securitization that is probably expected, and the accretion in terms of the fee income growth that can probably come through, I think all those aspects should hold them in good stead. In terms of even the asset quality reporting at stage 3 level, I think those look quite reasonable and contained at this point of time. So if the investor has a long-term view, my view would be to continue holding on to this stock.
Okay. Well, gentlemen, I think we have to thank you on that note because we have some general news coming up. Thank you very much for joining us today. We have to take a break. We are leaving you with some interesting advice we got from Ramdev Agarwal. We are back in a jiffy to discuss some more interesting developments on Dalal Street today.
Right now, the biggest event, apart from what we are going through geopolitical, the next big event is election. So both sides things are changing. Here, whatever actions we are saying, that is having direct impact on the possibility of polarized voting, one way or other. I mean, right now it looks as if the current government will come with a bigger majority. That's the wish of a lot of people, particularly people who come here. They have those wishes. So, but then voters don't come to the mass. Voters don't come to CNBC studio. Okay, so what finally will happen that time will have a huge impact. And market is, because it's still 60-70 days. So market is kind of a very calibrated in terms of taking that huge stance one way or other. What I have seen in last 1.5 to 2 years while managing mutual fund is that when the domestic money comes, it comes in very distributed mid-cap, small-cap funds and a lot of PMSs, small PMSs. And that money actually chases a lot of mid and small-cap companies. You know, the running theme all across is buy growth at reasonable price. We say quality and growth at reasonable price, which becomes even more difficult to find.
You're still with us here on Markets Today Talkback. We are taking you through what happened in the day's trading action today. We got through 3 of the top 5 stories that we present to you every day. So here's the 4th one. The top global story of the day. Asian equities slipped after the Trump-Kim summit was cut short without any agreement. The talks fell apart after the two sides failed to reach an agreement on US withdrawing sanctions. We had the markets in China, the markets in Japan, in Hong Kong, all ending in the red. The Kospi in Korea was actually the biggest casualty, losing almost 2%. We spoke with Eamon Haver of CNBC, and this is essentially him on the subject.
No deal here in Hanoi. The president scrapping a planned lunch with Kim Jong-un that was set to take place this afternoon, Hanoi time, and moving up his press conference about 2 hours' time, forcing the press corps to rush to the facility where the event was being held unexpectedly. This president saying simply that ultimately they couldn't get to a deal because the North Koreans wanted sanctions relief and he wasn't prepared to give it unless they were able to give access to a whole host of facilities in North Korea that the North Koreans apparently weren't willing to allow. Here's how the president expressed the frustration of today in the press conference just a short time ago here in Hanoi.
We spent pretty much all day with Kim Jong-un, who is he's quite a guy and quite a character, and I think our relationship is very strong. But at this time, we had some options, and at this time we decided not to do any of the options. And we'll see where that goes. But it was a very interesting 2 days. And I think actually it was a very productive 2 days. But sometimes you have to walk. And this was just one of those times.
So the president saying this was just one of those times when you have to walk away from the negotiating table. The president's done just that. Air Force One took off a short time ago. The president has left Vietnam. He's not promising to have another summit.
Okay, and the 5th and the last headline today, mutual fund flows into equities are expected to see a sharp drop in the month of February. The numbers will come next month, March 8th or 9th. This will be the 4th successive month of falling inflows. Fund managers say the pace of redemptions is on the rise. Inflows are increasing, but the incremental flows into SIPs are slowing down. Hear out what they had to say.
Gross flows have been stable at around, say, between 30,000 to 40,000 crores from April to now, right? And the net flows, because of the redemptions, so when people do profit booking as a part of their thing, right, that comes in. And so when you are talking about this narrowness, it can turn negative a month because of redemptions. But the key is this 30,000 crores has been stable for the equity fairly from April to now. There is general equity, and then you have balanced, arbitrage, FOFs, and all of that. So 15,000 crores is general equity, 15,000 crores is the arbitrage balance. The 15,000 crores of general equity has been stable right through the year. The arbitrage component and the balanced components go up and down based on, arbitrage is an institutional play.
Well, with that, it's a wrap on this edition of Markets Today Talkback. Thank you very much for watching.